Well, good morning, everybody, and welcome back to the Man and Machine here with the PeakBot team and Mark Phillips from Harvested Financial. Gentlemen, how are we doing this morning?
We're doing all right.
Watching what this market's throwing at us after the weekend.
Yeah. I will say
optimistic. Mark's optimistic.
Yeah, we were backstage. Ben comes in. I haven't even looked at the market this morning. Ben goes, I say, wow, or something. He goes, Ben, what are you looking at the market? It's down 2 points or whatever. And then Mark comes in and goes, green day today. And I'm like, what's going on? We should talk about it maybe a little bit. So Ben, what was your take on it looking? And I want to hear Mark's, and then we can get into our regularly scheduled programming of PeakBot picks and learn a little something, etc.
I mean, big sell-off over the weekend. Obviously, we got the SPY down 2% pre-market. Lots of news around it too, just around like tech and Wall Street predictions and things like that. I don't think that it'll continue to slide. I think statistically a 2% drop pre-market, you'll see a bounce back up. So will I play some put side spreads today? Maybe. But I don't know. I don't see it bouncing back 2% like Mark might be saying.
Mark, what do you got? What's your take? Of course, Ben, not financial advice. Mark, what are your thoughts?
I don't, on a day over day basis, like the news, how much that drives markets, like, what is this deep seek that's like, the narrative I saw was that like deep seek AI is now threatening US tech companies and putting in, people's minds that stuff's overvalued, yada, yada. Like at the end of the day, markets run up quite a bit already this year. Like we're literally barely giving back what we made last week. So, or maybe a little bit more than that. So I kind of put that in perspective. And I look at the fact that like futures are already up 40 points from where they bottomed at like 6 a.m. this morning. So we keep on that pace, like that 6,100 call, like where we closed on Friday. I think that 1.5 delta that I'm getting pegged at right now, I think that's cheap. I think I'm paying 35 cents for those.
Right. I'll take the play with you, Mark.
The licensed advisor. Yeah, I think
this is not financial advice. This is play account advice. This is a YOLO trade.
Not financial advice here. Mark, I gotta say, you were a bit more convincing than Ben was. But no, I'm just messing around. So very cool. We'll have to see what happens in the market today. Do we have a full week? We got a full week, no days off.
We have a full week, but we have FOMC this week.
We do have FOMC, so some of our bots will be off. Okay. So a lot to get into today. By the way, as we're getting closer here, if there are more pre-market, moves that should be discussed live on the show, let's not hold back. Feel free to chime in. But on today's show, we'll do a very quick review on PeakBot picks and our picks that expired on Friday, see how we did.
I want to know who won.
Okay. Well, I can fast forward for us if we want, but if we want the dramatics, we'll go through it quickly.
I want to look at the prices, but quickly.
All right. There was some good stuff. So then we will do stocks in real life. Carvana. What a stock. Okay. We'll talk more about that and our experiences in real life with that stock. And then learn a little something. All right. Mark's going to be taking the mic, educating us today once again. So a lot to go over. Let's hang tight and let's get into it. All right. So PeakBot picks, for those of you who are not familiar, this is a stock trading competition that myself, Ben, and Thomas do on a week-to-week basis. So let's look at the picks from the 17th that expired on the 24th. So, Ben, we'll go with you first. You were two bulls and a bear. You were bullish on Dash over 167.5 for $44 in premium.
Bam.
Not even close.
Here we go.
Bullish on Meta. 600. You're trying to stay over with your put spread for $390 in premium.
It's a nice juicy premium.
Another one, not even close. Boy, bet you wish you took that one.
I sure do.
Covered your put spread by $50. Okay, and then you were bearish on Etsy, trying to stay under 55 for $16 in premium. Ben, a nice 3 for 3 week. There you go.
3 for 3, nice premium. Feeling good about that.
Back on the horse. All right. Let's see what I did. I had 2 bulls and a bear as well. I was bullish on CVX over 157.5 for $17 in premium. And I didn't do it. Look at that look at the end there. Give me the 5-day really quick. I want to know if I was right at all.
No.
Nope, pretty much wrong the whole week. Awesome. All right. Bearish on Intuit TurboTax. INTU under 615 for $155 in premium. I was under. I was bearish.
Oh, under. Okay.
Nailed it.
Yes.
All right.
You got it.
Nice premium on that one. And then I was bullish on Morgan Stanley from Monday to Friday over 134, and I did.
Okay.
All right.
2 for 3.
2 for 3 for Dillon. Not as fun as I would normally go with the premium, but happy with it. The big one paid off. Thomas, let's wrap it up. He would have to go 3 for 3, and then we'll look at premium. Here we go. Bearish on all 3 of them. He was bearish on Pepsi, under 150 for $33 in premium.
Squeaks that one out.
Just squeaks that one out.
Yep.
McDonald's under 287.5 for $50 in premium.
Wow.
Squeaks
that one out too.
$2 of breathing room. XOM bearish under 115.
Wow. How did Thomas pull out a 3 for 3?
He did.
We were looking at that on Friday, and I think he was like 1 for 3.
Yeah, it turned around for him real nice. So here's the thing. We go down to premium, and when we go down to premium to break the tie between Ben and Thomas, I'll share a screen quickly. Here's what we get. Ben, great job. Your premium paid off this week. Well done. I went 2 for 3. Ben and Thomas went 3 for 3, 8 for 9 as a team. And Ben takes the weekly win to take solo first place there. And you needed a 3 for 3 week for your win rate. I mean, we're acting like your win rate is bad. It wasn't. It's like, 75, 77%. But
77, yeah.
Nicely done. So, all right. That was PeakBot picks for the week. We did make picks on Friday. That'll expire for this Friday. So we will review those on Friday. A lot of Friday there. Okay. Do we have anything else to cover? Doug, by the way, just a quick shout out to Doug. Always here. Always a great supporter. Good morning to you. Let's get into stocks in real life.
Let's do it.
Let's do it. All right. So today we will be talking about a stock that I have a profound experience with, at least in the year of 2023, Carvana, ticker CVNA. Ben, tagline, I never saw this before. Will drive you happy?
That's what they say. Will drive you happy.
I kind of like it. Instead of like, will drive you mad, you know?
Yeah. Well, I'll tell you what. My only experience with actually using Carvana as a service wasn't great. I was trying to get rid of my old 2012 Nissan Sentra, have them come over and pick it up and all of that. And they were just offering me pennies on the dollar for it. I was insulted. And maybe I'm biased because I have a secret love for that car, but
well, isn't that their whole business model? Like, how can they exist without, undercutting, their buyers and their pricing to their
totally is.
Yeah.
Totally is. But I'll tell you what, they were not driving me happy. That's for sure.
Yeah, I don't have any real life experience with Carvana as a service other than after trading it on the ride I took in 2023 in this stock. And we'll look at the chart and this crazy volatility with this stock. Can't wait to hear what Mark has to say. My only real life experience is seeing the occasional car tower, right? That's them, right? Carvana on the side of a highway, and the glass towers, just 12 cars on top of each other, or a bumper sticker or a license plate thing. Just says, I've never used it. That's my limited experience with the service. Mark, ever use Carvana?
Never used the service, and I think because I suspected what Ben's experience was, but also never traded the stock either. This one flashes red warning signals everywhere to me.
Sure,
I'm not touching this.
Oh, it for sure does.
Yeah, this stock has been on quite a ride. We can take a closer look at it. I actually, prior to the show, I was looking up some fun facts about the stock. So just for some context, if you go 5 years or all time here, that's when this chart starts to really look silly. Yeah.
Well, look at that.
So quickly, my experience with Carvana, Ben, when we launched our wheel strategy, I guess over maybe close to 2 years ago now, we had an unhedged wheel, the traditional, cash secured put, covered call, and our watch list that we had initially curated, Carvana was at the top of the watch list because we were so young and silly, right, Ben? We thought, let's put the highest paying premium at the top of the watch list and watch everybody also take the same high risk trade. Well, for those who hopped on Carvana and stuck with it, like I did in 2023 into 24, we rode this thing from, Ben, I remember doing it from like $5 to $55 on the wheel. It was my 32% return in 2023. Half of it was on the back of this stock on the wheel alone. I just caught it on the right upswing. And I'm forgetting exactly when it was, but looking at this chart here,
I think we started wheeling it in like, I want to say at this low here, like April, May 23. Yeah. And then we just took it for a ride.
That's exactly right. Yeah.
I mean, it was trading at $6 back then.
Yeah. So Carvana, I'm just looking at some fun facts here. I'll pull up my screen, and this is GPT generated, but it's pulling from some pretty reliable sources here. Obviously, the volatility here. August of 21, shares were priced at $370. However, by December of 22, it plummeted to $4. So from 370 down to $4, a 98% decline. But then it rebounded all the way back up to 263 by November of this last year. And what's it trading at right now on your screen, Ben?
Pre-market, we are at 235.35.
Yeah. All right. So pre-market's hurting it a bit, but I mean, what a ride this stock has given people. It's still pretty. I mean, I think a lot of people play this on our trend spread strategy, truthfully, to collect some premium, have a defined loss, and some take profits along the way. As a business, we're seeing here third quarter 2024 reported 34% year-over-year increase in vehicle sales. And this was what I thought was interesting here. According to Insider Monkey, as of October 24, Carvana ranked as the 7th most popular stock among mutual fund managers, according to a Goldman Sachs report. Thoughts on that?
Insider Monkey. What is Insider Monkey?
Let's find out. Insidermonkey.com. You know what? Who knows if we trust it or not, but
I don't know. Mark, do you trust Insider Monkey?
I've never heard of them, so no.
Anyway,
but
go ahead. Yeah.
No, I was just going to say, I believe that it could be popular amongst fund managers, especially if you're like running an active strategy, the way this thing is moved, right? Like I can definitely see a lot of trend following or whatnot wanting to get involved there. Personally, I'm too scared. This is like, I was looking condors, 30-day condors are like 4% of the strike price. That's like 8 times what the SPX is, at the money balls in like the 60s, 70s, just with that price action, like clearly no one knows how to price this. So I'm not dipping my toe in there, options or stock.
Don't blame you. Don't blame you. It felt like a stock that needed to come up.
Insider Monkey definitely sounds like a Reddit guy.
Yeah, sure does. I won't be exploring the site.
He's slamming down tendies in his mom's basement.
Yeah, he is.
I mean, for momentum players, something like this is great, right? It's just pure movement. And I think if you have the strategy that wants to, you know, I don't know what the right word is, duck and swerve and bob and weave or whatever to try and trade this, sure. But like from a pricing perspective, like how can you believe any of these prices? Like no one knows what's going on.
No.
Yeah.
This is certainly a scary one. I'm trying to see what other competitors they have that are publicly traded. I guess CarMax, largest used car retailer, AutoNation, and then everything else is kind of stuff I've never heard of. I was going to say, I mean, as a business, I don't know how much competition they have. I mean, who do they compete with? You know, their primary service, truthfully, you know, okay, known for its innovative car vending machines, fully automated, coin-operated structures where customers can pick up their purchased vehicles.
I mean, they're just competing with dealerships.
They're just
Used car
competing
dealerships.
Yeah.
Any guesses on when they opened? What year?
2003.
Mark?
I'm going later than that. I think like 15 or 16.
Wow, nailed it. 2015 out of Nashville, Tennessee.
Wow.
So the only thing I was curious to do, unless you guys have additional thoughts on Carvana, I wanted to find it on the trend spread watch list right now and just see if it's on there and what it's doing. It is on there. So I'll pull it up. It's bullish trending.
I think the trend is the way to play this, by the way. Like, you know, despite your massive wheel gains, right? Like this is, you know, a difficult stock to play on the wheel. Like I think you want to be using trend on this to, you know, with some momentum signals or mean reversion signals, or I don't even know what kind of signal, but like you're going to collect a lot better premium on short-term trend spreads than, you know, the wheel. Obviously you'll collect higher than SPX premiums with the vol, but you know, the way like the equities moved, I think that puts your risk a lot more significant on the wheel, you know, despite the hedge of the wheel, obviously, that we have. But still, I think trend is the way to go with this.
I'm really glad you brought that back up, Mark. I'm realizing that I didn't really make a point to say that like my Carvana on the wheel was absolutely insane and irresponsible. It just happened to pay off.
You probably would have done better owning the equity.
Yep.
Yeah.
Like significantly better. Yeah.
Truthfully.
Yep.
Absolutely. So, you know, but we were selling like seriously, it got as low as $4 as we saw. I was wheeling it at like a $6 or $7 strike price. It was insane. But anyway, so Carvana on the trend spread watch list, bullish high. Nice EV. Okay. We're checking 3 of the core 4 here. This is expected value, which we like to see over 1. This is probability of profit on the lower end. You know, the lowest you're going to see on this watch list is 70%. ROI is very good, obviously, with a good buffer, but that's because it's a high, you know, a very wide spread. We have a $15 put spread here. Sold put at 232.5, bought put at 217.5. So that creates a $1,500 risk, but it's collecting $192 in premium. That's for a, you know, what would be a 4-day contract here. So look, the premium's there if you like the trend and it's for you. Not financial advice here, but we know people play it. So Ben, do you have the chart still up?
I do, yeah.
232.5. I just want to see what that looks like coming into Friday. Over 232.5 is the strike. So I want to know if there was any resistance or support.
That's right here.
Okay. All right.
Right at that price level.
Very cool. Awesome. Well, I love talking about Carvana. I also hate it because now I put eyes back on it. Now I'm thinking about it again. I thought I had, buried this, but I don't know. I've been there, done that, got the t-shirt. I should quit while I'm ahead. But
it's Dillon's guilty pleasure.
Yeah, it is. It is. I kind of made my name off of that. How often
your size is small.
Yeah. Yeah. How often do I refer to my 32% year in 2023? Now everybody knows half of it was Carvana. Okay. Mark or Ben, any other closing thoughts on stocks in real life here with Carvana?
I won't be trading it.
I'm not touching it with a 10-foot pole, but like I'm curious about that coin operated aspect that you mentioned. How you like they're famous for their vending machines that are coin op. Like, how many coins are you bringing to purchase a used car?
Can we say card operated? Yeah, what coin operated? That might just be GPT screwing them, but I'd be curious to know how it actually works. But Ben, that's not the service you utilized.
No, I didn't go in person. I went on their website. I plugged in all the specs for my car, and then they gave me an offer, and they said, "We'll come and pick it up for you, so you don't have to do anything." So,
got it.
I mean, the convenience of that is nice, but I think a local dealership might do the same for you.
Yeah,
I don't know.
Fair to say that Sentra was, had its day, right?
Oh, I still have it. It's
the same one. Okay. Ben,
it's the only Nissan Sentra in the United States that has a hitch on it. I installed a hitch on that Nissan Sentra.
Yeah. Ben does not like investing in depreciating assets. Ben rides his cars until they're dead, and they're always a Nissan Sentra. No. Has it been the last two?
Nissan Sentra's got another decade in it.
Oh, yeah. How many miles are on that puppy, Ben?
Not many, like 150.
Oh, okay.
I can run that thing to 300.
Yeah, you're giving it regular,
No, I'm not. It's just sitting out in the driveway.
Yeah. Oh, all right. Well, good segment on stocks in real life. Let's get into learning a little something here with Mark. What do we got here today?
So today we're going to go over strike price selection, specifically in the money and out of the money. So I know that we've gone through some more complex topics over the past few weeks. And then last week we brought it back a little bit with, I think it's just call versus put was last week. Mm-hmm. So we're going to keep it a little bit simpler going into in the money versus out of the money. So Mark, why don't you take it away?
For sure. Strikes, you say they're very simple, but like, I think they're really where like the rubber hits the road in option strategies, right? Like the end of the day, come expiration, your value is going to be defined by which strikes you choose. No matter what vol levels you're selling or premiums you're collecting, at the end of the day, like it comes down to strike selection at time of trade, but then also like where things expire. So I think strikes are actually like a very deeply interesting part of the options, the strategy process. And they're actually like the count of strike selections, I think really can make a difference whether a product is tradable or not, or tradable for a given strategy. We've seen a massive proliferation in strike listings over the past decade. Originally strikes were only listed in $5 and $2.50 increments. Then about 10 years ago, we got dollar strikes. But not only do we have more count of strikes, we have more count of expirations with 0 DTEs. So like more strikes mean more different possible option strategies that you can put on. Not only can you do more complicated structures, multi-leg structures, but you can also tweak the payouts of them much more granularly. So you can set up broken wing butterflies. You can set up, multi-leg spreads with fairly precise kind of demarcations. And it allows you to, really tune your risk preference to what the market's offering. Some of the downside of that is more fragmented liquidity, to the extent that dealers have to provide more quotes and more, prices out there on all these different options. That does stretch kind of liquidity a little bit, but I don't think that fear has necessarily been borne out as we've seen more and more strikes listed. That really, like, it's never been better for retail or buy side, options traders in general. That like the number of strikes that you can trade right now is amazing, and I think that flows through to strategy potential.
Yeah, it's only going to get better too. I just see more and more opportunities, especially with 24-hour markets coming. as soon as options expands to that, then there's going to be multiple expirations in a day. We already have AM expirations once per month on the indices. So that'll be interesting to see that actually come to life. Interesting from the botting perspective, if you will, too, right? Like I'm personally nervous for these 24-hour markets to come, because I don't want to be worrying about, making sure all of our bots are operating efficiently and effectively 24/7.
Yeah, 24-hour markets, that's a whole different ball of wax. But from a strategy perspective, particularly if you're designing a strategy that you've back tested, or is targeting a certain sort of delta level, the strike listings has a huge impact on that, right? Like if there are only strikes every 250, you might have the 22 delta option and then the 36 delta option. If you're targeting 30 delta, that's sort of a tough decision, where you want to go. So actually last fall, I haven't refreshed the data since then, but I did some work on figuring out what the average delta distance is in different products. So thinking about, for every given delta, 0 to 100, how close can you get to an actual strike listing with that delta in a variety of products? And no surprise, SPY, SPX are at the top of that. They have, particularly on serial expirations, they have something like 1 1/4 delta away. So no matter what your delta is, there's a strike no more than 1 1/4 delta from that. That's pretty good. Yeah. Another sort of, or what that sort of highlights too with strikes, is that strike listings it matters based on the handle of the stock too. That some of the limitations of the way strikes are listed, right? Like we can't get below or more granular than 50 cents. If you have a $6 stock, it's going to be hard to get that granularity of delta. Yeah. Whereas some of the names that come up to the top of the list, Costco, we've talked about them in Stocks in Real Life, like $1,000 price handle, with $5 strikes, that does very well. MSTR, the Costcos of the world, price lines, like those are going to have very good strike scores. Whereas some of the lower handle names aren't necessarily going to have that. So, it's kind of a trade-off with strategy development. I like lower handle names because you can build a basket of opportunities. You can put your coins on a couple different names all at once, or your chips. But, the downside of that is you might not necessarily have the best strike listings. So I think, as boring as they might seem, and as, a fixed component of your strategy, it really matters for how the rubber hits the road.
Mm-hmm, mm-hmm. And at PeakBot, the strategies that we are automating, we are typically, all of our strategies, we're looking for out of the money strike prices. And that's partially because we are selling options. That's what our strategies do at PeakBot. We're selling spreads, and we want to give ourselves the higher probability of winning, maybe take a bit of a smaller cut in premium for ourselves by selling those out of the money options. That allows us to essentially start the trade in a winning position, in a winning setup. So if the stock price does not move at all, and this is again how PeakBot likes to set up our trades, if the underlying does not move at all, we will still win that trade. Whereas if we were to sell in the money, we would need some sort of movement in order for us to take home a win there. The opposite could be said if we were buying, right? If we were buying, we could start in the money, and we would still need some movement to win on that trade. But you could also get more bang for your buck, theoretically, if you were buying out of the money strike prices, just given the underlying movement. So we have a question, Mark, I'll let you take this one. What makes them different, or what makes them offer smaller increment strikes?
Is it demand-based? So it's a really good question. And there's a really long and extensive document that governs how this happens in the marketplace. It's called the OLPP, Options Listing Priority Plan, something like that. But essentially, it's an interesting market structure issue because it's sort of a competitive issue. And it's sort of also a question of exchanges versus their kind of clients or customers or participants. So what the OLPP says is that each exchange only gets to list a certain number of dollar strikes. So the dollar strike listing program allows exchanges to nominate certain tickers to be added to the dollar strike listing plan. Now, of course, once one exchange lists something with a dollar strike, everyone else can pick that up. But each exchange only gets to nominate a certain number of issues. That generally comes down to, demand. Where they see the most volume, they're going to list names with those dollar strikes. There are also rules about the price handle of the stock. So, SPY maybe as an exception, but something like Costco couldn't get dollar strikes because I believe the number's 200 or 300. There's some, I forget off the top of my head, but there's some threshold over which you have to get into $2.5 and $5 strikes. You won't see SPX dollar strikes either. And the kind of balance to that all is, obviously you want to meet customer demand. If, give them infinite choice and, that expands, like I was saying, the potential number of strategies you can do. The constraint is that more strikes require more bandwidth, require more, infrastructure on the exchange side. They've got to have matching engines to process all the trades at all those different levels and all the quotes coming through at all those different levels. But it ultimately fragments the capital base of market makers. That if they're going to be providing liquidity on 2 or 3 strikes, they can deploy that, capital in a very concentrated manner. Once you've split that across dozens of others, that starts to get thinner. Now, of course, market makers want customers, so there's, a little bit of give and take there. But at the end of the day, sort of that competitive issue is balanced by, some rules that govern how the exchanges interact with each other, because despite them being independent, for-profit, competitive entities, they do have to sort of harmonize via the OCC and reg, the national market system.
Very good question. Even better answer. I learned a little something right there. That was helpful.
You're really tapping into my the options market structure is very close to my heart. So it's a very good question.
Started Mark's engine there. So my only quick thing on strike prices, is when I try to explain it to new traders or traders new to options, I say, look, this is exactly what Ben and Mark said. This is the action point. This is where things happen. It's probably, in my opinion, the most important thing. When I explain it to people, I'm like, look, this is where things happen. This is where it's going to determine if you're going to be a winner, a loser, or somewhere in between. I talk about sports. I go, if you bet sports, if you had the Eagles over 35 yesterday, that's your strike price. That's what you're looking for. I mean, boy, what slammed that. But anyway, great games yesterday. So very, very good session on strike prices here. Mark or Ben, anything else to close out on that? Otherwise, we can just look at some economic events and maybe do a quick SPY analysis.
No,
cool.
I'm all set. I'm all set on strikes.
All right, set on strikes. Ben, why don't you tell us what we got going on in the market this week?
All right, so I will pull up the TradingView calendar. We've got, obviously, we're looking at a big weekend sell-off right now. I'm looking at SPY pre-market. We are down 2.1%. Mark probably has the futures number, and I think we might have regressed a little bit since the beginning of this show, Mark. I don't know if we've bounced back or if we've still bounced back that 30, 40-ish points that you were pointing out before.
Yeah, I think we bottomed at 59.70, and I see us at 6,004. I think we peaked at maybe 60.12 or something like that. So we're 8 points off this morning's high, but still 30 off the low.
Got it. Okay. Yeah, we'll keep an eye on that. I'll be interested to see what happens during the open. I'm sure there's going to be some crazy price action right at the open, but we'll see how things kind of flatten out for the day. So anyways, we've got not too much going on today. Tomorrow starts FOMC. We've got PPI data early on in the morning, pre-market. We've got a Fed speech here, another Fed speech.
Are we on the right? I see January 14th.
Oh, you're right.
Good.
I'm just going along with it. I'm going along with it like that's what's actually happening this week. All right, so we do have quite a bit going on today, though nothing marked as high importance events by TradingView. That doesn't mean that it's not high importance. So we've got next bit of data coming out is new home sales. We've got some auctions later on today at 11:30 Eastern and 1 p.m. Eastern. Going into FOMC tomorrow, not too much going on the first day. We've got there's a lot of data coming out, but it's all, durable goods marked as high importance. I've never really considered durable goods in my trading scenarios. I'm not going to be trading the condors today going into tomorrow because of FOMC start. And then on Wednesday is when we actually get like the Fed rate decision, and we get the press conference and all of that on Wednesday. So I will also not be trading my condors from tomorrow going into Wednesday. And I probably won't trade Wednesday going into Thursday either, because our condors get in at 12 p.m. Eastern. So I want to avoid that late afternoon volatility. Then going into Thursday morning, we've got quarter-over-quarter GDP. We've got not much else the rest of the day. And then PCE price index on Friday, personal spending. So quite a bit of action this week. I'd say for me, very wary with the condors. But I don't know. What are you guys' thoughts? How are these events going to impact your trading this week? Mark, you first.
Yeah, I think we were talking at the beginning of the show about how, we're up 35 points off the lows. And, I'm somewhat jokingly underpricing that 6,100 Green Day call. But I think given the price action and given the amount of indicator or the amount of, news releases that are coming out, like that definitely makes me a little bit more nervous this week, and probably a good excuse to cut sizes. I think the same reasons that make me want to buy that 6,100 call are going to make me skittish about this event, landscape, because volatility begets volatility. And that, once we start moving a little bit, I think that's what causes big rebounds, big turnarounds. But I also think that's going to produce some chop from some of these news events that, whether they're normally significant or normally wouldn't have been in this kind of, churning environment, vol is going to be getting more vol.
Mm-hmm. Mark, how do you feel about an at the money straddle, like buying an at the money straddle at the open, like on a day like today, knowing all of these events are happening this week and we've got this huge market sell-off over the weekend? It's probably very expensive to buy right now, but wondering if you have any thoughts on that as a strategy going into this week.
Yeah, so I'm just looking at the daily straddle. We're like at 59.72 in SPX terms. It's something like a $42 straddle. Obviously a Green Day would triple that.
I was going to say $42 isn't bad.
Yeah, exactly. Like, we moved 35 points this morning. So yeah. And now that is just the 1 day straddle. If we want to go out to Friday the 31st, our 59.70 is like $110 straddle for the week. Obviously we moved that over the weekend. We moved more than that last week. So those are two interesting indicators. I tend not to buy straddles because they're so Greek rich. And, obviously, even if we only move 80 points, you're only down 20% on that position. I think if you're really expecting some moves, I probably am more inclined to go out a little more towards the wings, more like a strangle, or to the extent that I had some directional bias, I'd probably put on like a broken wing butterfly.
Mm-hmm. That would be a fun conversation to have one day. Straddle versus strangle. I'm in the strangle camp, but I realize that, you have a higher probability of hitting a max loss, though the max loss will be lower. I think there's give and takes there. But anyways, not to sidetrack us. Dillon, your thoughts on the economic events upcoming this week?
I have thoughts, only because you two have thoughts. As you're both feeling a bit weary here, I'm looking at my account. I already have my trend spread plays that I let roll from Friday. I'm just going to share my screen here. Here's what I'm doing right now. I am going to be pulling my wheel. I had two spreads on Roblox 2 put spreads on Roblox on the wheel for the last 2 weeks. I've gotten away with it. I've collected a nice premium. I finished OTM both times. I don't feel, although they're very bullish on technicals this week, the pre-market has them down with this. However, what I did, I'm going back. I'm getting rid of Roblox here. I'm going back to my trusty steed, Walmart, paying me $20 this week. Okay. Here's why. Everything I looked at on the vertical wheel watch list market is pre-down or pre-market is down with the market, not Walmart. Walmart's up pre-market. And instead of 13 grand setting aside for, I don't know, $50, $60 in premium, I'm going to set aside 9,300, keeping Walmart over $93 by Friday for my $20 in premium. Again, I have a new approach. I'm not doing any condors right now for the same reason you guys were, a lot going on this week. Market's already weird this morning. I'm leaving that. I had these just running from last week. I might get a little more active with trend spread later today into tomorrow, since there are entries both today and tomorrow. But I want to let the market tell me what's going on first. But when I don't know what's going on, I will Walmart. So we're back. I need a Walmart hat.
Yeah, you do.
I actually looked at some retro Walmart hats online like a couple weeks ago, and there was nothing great that didn't look like it had lice. But anyway,
you're usually a big hat guy. No hat this morning.
Well, here's why. First of all, I have a fresh haircut, which is helpful. I look 10 pounds thinner when I have a haircut. And so also we're talking, we're trying to up our look here, right? We're trying to look good, feel good, trade good. We're talking to a marketing agency that they're like, hey, look, we want to no hat. They're like, can you lose the hat?
They
I'm
did
like,
say
oh, see, I specifically put on my hat this morning because I was
right. And Mark, I would never tell you to lose the hat. First of all, I need that hat. Second, you pull it off. Don't you?
You can make that happen.
You ever change a thing? But I'm like, oh man, I'm gonna lose my hat. That's tough. Anyway, okay, enough about me. What else, guys? So we did everything we needed to do here. The only thing we need to do is technically look at this, the SPY chart, but I think we've talked enough about the market and how we feel to where it's covered. Any closing remarks, fellas?
Trade cautiously, not financial advice. I mean,
stay nimble out there. We, Monday morning when you get a little bit of a shocker like this, so take it to heart. Stay nimble. No need to be a hero on a week like this where it's skittish.
Don't be a hero.
I'm a big believer in sometimes the best trade is no trade. So there will be, for me at least, a lot of no trades this week.
Yeah, and if you are watching this or any other, or the market or any other shows saying anything, and you're overwhelmed and don't know what to do, well, I'll tell you what to do. Let a pro handle it, okay? Go to peakbot.com/harvested. That's why we're here. That's why PeakBot and Mark and Harvested Financial work together. You hand this off to Mark, registered investment advisor, to manage your portfolios for you. If you don't know what strategies to use or what stocks to pick or when, well, let the pro handle it. Mark over at Harvested Financial and PeakBot, when we introduce automation, we've done something very special. We're providing a professionally managed portfolio for as low as $10,000 AUM. Okay. That's a big gap that's being filled here. Hard to get a professional who knows what they're doing and is licensed to do so to manage your account. Again, we've been up and running with this for a couple months now. We are hitting our stride, always got new strategies and everything else coming out. So unless you guys have anything else here, make sure you go to peakbot.com/harvested, sign up now. Fantastic process. Gentlemen, unless you guys have anything else, I think we're good.
Happy trading out there, fellas.
Happy trading, safe trading. And of course, PeakBot will be live on Friday with the automation station at 11:55 a.m. Eastern for some more PeakBot picks. Hopefully, Thomas will have his studio set up. Thomas, if you're watching,
man, Thomas.
Tell you what, Mark's crushing you in that department. But anyway, thank you so much. And as always, we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.